Good afternoon and welcome to Biztech Asian Midday Marketwatch. Our guest today is Jeff Halley, Senior Market Analyst Asia Pacific at OANDA. Jeff, as always, great to have you on the show.
Thanks, Brian. Great to be here, mate.
Now, before we get your insights, let's take a look and see how the cryptocurrency markets first are performing, and then we'll go and take a look at regional markets. So if we look at the crypto markets right now, and you just give me a second, we've got Bitcoin, which is at 42,431.2. It's down 7.06%. Ethereum is at 2,976. It's down 7.03%. Now, if we look at how regional markets are performing, mainland China and South Korea are closed today for holidays. The SGX is at 3,055. It's up 0.44%. Bursa Malaysia is unchanged, 1,527.88. Across the rest of the markets, we've got and just give me a second, we've got the Nikkei, which is at 29,958.25. It's down 1.78%. The ASX 200 is at 7,267.2. It's up 0.26%, and the Hang Seng is at 24,022. It's down 0.32%. So, Jeff, what's your view on how markets have performed this morning?
Well, I think Tokyo is playing catch up. It was closed yesterday, so it's playing catch up to the sell-off that occurred yesterday. So we shouldn't read too much into the price action on the Nikkei today. For the rest of Asia, though, it's fairly resilient. Obviously, mainland China and South Korea are away today, but I think US equity futures have rallied quite strongly after the Wall Street close, and as we know, that was a pretty horrific session, and that seems to have lifted equities across the region. Australia is also pretty much unchanged to slightly higher now as well. We've seen commodities prices rise this morning quite strongly. I think what we're seeing is dip buyers. The headlines have gone quiet, and the dip buyers couldn't resist it, and that's the sort of price action we're seeing today in Asia. But I do think that it's probably quite vulnerable to any more negative Evergrande headlines coming out, and this rally, incipient as it is, could easily change directions very quickly.
Now, Jeff, I want to zoom in on the Evergrande challenges that's weighing in on investor sentiment. What's your view on the contagion risk? Because after all, 300 billion is a huge amount, and they directly or indirectly support something like 1.8 million workers in China.
Yeah, and this is why I think that while the Chinese government may leave investors and everybody else in the markets hanging on for a while, much like they did with Huarong, we are going to see some sort of action in the end. I don't think it's a Lehman's or an LTCM style event. I don't think the interlock contagion is there. They're also not going to want to torpedo their main banks by seeing the property market take a bath either. So my best scenario here is not a disorderly liquidation, which will have ramifications across the world, but we will see an engineered debt equity swap where shareholders of Evergrande are wiped out, but the banks and the associated lenders then become, equity holders in the company itself.
Now, Jeff, you also alluded to the price increases in the commodities markets across the world. Something that sticks out for me is the increase in gas prices. What is the reason for that?
Yeah, look, we've seen a rally today after a pretty shocking yesterday and Friday for commodity markets, with the exception of gas. Sorry. Now, gas is moving to its own beat at the moment. The others are coming off very high levels, and I think that's risk sentiment driven. Gas, though, it appears that the market has not priced in, or those responsible for buying and hedging natural gas in the physical market have been quite complacent. And they haven't hedged their consumptions forward. This is leading to a short-term or quite aggressive price hikes in the short-term physical market. When you look at Europe, the amount of gas they have in storage is below seasonal averages for this time of the year. Asia is also, with South Korea, Japan, and China aggressively buying up natural gas for the winter as well. That, I believe, will also support oil prices, because at a certain price level, oil becomes a substitute for gas if they can't get it to run power stations. So I think it's the fear of impending shortages of gas over the winter that is driving these prices, and that's why I believe they will be sustained. And I think quite a few parts of the world could be in for a bit of grief if we have a cold winter in the Northern Hemisphere this year.
Now, final question, Jeff. What are the key events and data points that we should be looking out for this week that will move markets?
We've got a huge number of central banks this week. Now, Norway will probably raise interest rates this week. Indonesia we have later today, although I'm not expecting them to make any changes to monetary policy. The key event here, well, there'll be two. One will be the return of China markets to work tomorrow, and how the Evergrande situation evolves and its impact on risk sentiment. But I think the real event this week will be the FOMC. Now, that will all start hitting Asia markets on Thursday morning, Wednesday night, New York. And it's whether we're going to get any concrete guidance on a tapering timetable from the FOMC. And I believe if they do make noises about starting in the end of the year, then we could see another bout of dollar strength, and that could lead to equity weakness and also to Asian currency weakness, because I don't think the markets have priced in any possibility of a taper tantrum, but I don't discount that possibility at all myself.
Now, Jeff, as always, thank you very much for taking your time to come on the show.
Always a pleasure, mate. Thank you.
Now, we've been speaking to Jeffrey Halley, the Senior Market Analyst, Asia Pacific at OANDA, on Biztech's Asian Midday Market Watch. I'm Brian Fernandez. This video will be on our Facebook, LinkedIn, and our various platforms, as well as our website, www.biztech.asia. Please like and subscribe to all platforms. Thanks a lot for tuning in.